Hi, my name's Alex. I'm a CPA with Stronghold Accounting. My background was auditing public companies. Now I help small businesses optimize their profits through accounting and advisory services. And if you're a small business owner and you're wanting to understand margin, you hear people talk about gross margin, net margin, profit margins in general. You don't really get them. This is the video for you. I'm going to break them down, the ones you need to know and exactly what they contain. So let's start off right away. First, I've got a P&L here, your typical income statement that you could expect to see with your revenue, your cost of goods, direct labor, operating expenses, and net income. So let me break down the three main types of profit margins. Number one is what I call your product margin. Number two is your gross margin. And number three is your net margin. So let me start up at the top. So when you're looking at an income statement, the way it works is number one, you've got your revenue up at the top, obviously, right? Now, after that, here's a key distinction that if you're not already doing this, you should definitely look into having your accountant do this, is I break out your cost of goods sold, your hard cost of goods sold, separately from your direct labor. And the reason we do that is because, as Greg Crabtree, the author of Simple Numbers, says, your employees are the only costs that come to work with an attitude. They're the only ones you have so much more control out of all of the other costs in your business over. You can choose to hire, you can choose to fire, you can optimize the efficiency of your labor. So we need to segregate direct labor from the actual hard cost of goods sold, whatever that is to produce your revenue as a business, right? And the reason we do that is because we can see two different types of margin from this. So if we take our revenue and we subtract the hard cost of goods sold, we get what's called a product margin. That tells me the margin on my revenue after the hard cost of goods, right? After subtracting direct labor from that project margin, I now get to my gross margin, which is essentially the engine of the business. This is the core operations of the business after all of the direct cost of goods and the direct labor towards that revenue gets you to that gross margin. When I see a business that's struggling and they're not profitable, 9 times out of 10, it's the gross margin figure right here, the engine of the business that's not properly fueled. In rare occasions, I'll see operating expenses become the culprit of low profitability, but it's much more rare than gross margin being the culprit. So number one, you have your product margin, right? Revenue minus your direct cost of goods. Number two, you have your gross margin, revenue minus your cost of goods, minus your direct labor. Very, very important to distinguish those two. And lastly, you have your net margin, which takes your gross margin and it subtracts all of your main operating expenses. Think of these as fueling the engine of the business, right? Your facilities, your rent, utilities, your marketing, your management or administrative labor, all the payroll tax and benefits that comes with that, and your other operating expenses. That, after the other expenses like depreciation, interest, etc., results in your net income. And when you take your net income and you divide it by your total revenue, that is where you get your net margin. So you are going to establish targets for your specific industry and your specific company size. So I just popped open this target column. And now, before you see this, targets are different by industry and by company size. So this is just an example. In order to get your specific targets, I need to see your specific data and understand your industry. But for example purposes, we can look at product margin and say, hey, we've got a target of 40%. See here in this example, the product margin was above target at 53.9%. If we take the product margin of $827,000 divided by the total revenue of $1.5 million, they are above target in this scenario. Now, for gross margin, this target is a bit lower than the target for the industry. Taking the product margin of $827,000 and subtracting the direct labor got us to the gross margin of $479,000. And lastly, our net margin at $103,000 after considering the gross margin minus the operating expenses minus any other income and expenses got us to the end result of $103,000, which was below our target net income margin of 10%. So the reason these are so critical is if you can understand the target margin, both gross margin, product margin, also net margin for your specific industry, you can understand where you're bleeding cash. Is it the net margin that's low because of my engine of the business, my gross margin? Is it because of my other operating expenses? When you look at the numbers, you're going to be able to tell exactly where cash is bleeding. And that's the importance of understanding your margins benchmarked against your industry peers. So just to recap, you've got your three main types of profit margins. Number one, your product margin. Number two, your gross margin, the economic engine of your business. And number three, your net margin. And all of these, you're not able to see the product margin unless you segregate your hard cost of goods sold towards your revenue from your direct labor of that revenue. It is really critical to see. Remember, labor is the only cost that comes to work with an attitude that you have direct influence over their efficiency, over hiring the new person, firing a person. You have more control over that cost than any other cost on your profit and loss. If you're not sure what profit metrics you should be at, we do a financial health assessment where we'll look at your QuickBooks file. We'll identify any red flags that the IRS or a third party may pick up on. We'll identify any opportunities of saving, and we'll get you the results of the health assessment within 24 hours, along with a customized proposal of what it looks like to work with us. If you go to strongholdassociates.com/free consult, you can lock in that financial health assessment today. Again, hope this was helpful. My name is Alex with Stronghold Accounting. Thanks for watching.